Hi everyone, Mike Trejo, broker, owner of Bridgepoint Funding. And today I'm going to talk about something that is oftentimes overwhelming, intimidating, and downright scary for so many. And it is the home loan pre-approval. I'm also here to tell you that it does not need to be scary or overwhelming or intimidating. So there are basically four things involved in a pre-approval, and they are the capacity, the capital, collateral, and credit. In the industry, we refer to those as the 4Cs. So I'm going to go through each of those right now, and I think this will be really helpful to you. So number one is the capacity, and basically, or the ability. Do you have the capacity and the ability to purchase the home? It's going to involve a review of your income, your job history, your savings account. We're going to look at your financial background. We're going to dive deep into that. We're going to look and see if you have overtime, or do you have bonus, and do you have a history of that? Or do you have straight salary and it's very predictable and it's very consistent? And I will tell you that oftentimes that is not the case. So in regards to overtime or bonus or other income, we typically are looking for a 2-year history, although in some cases it can be as little as a 1-year history. So the capacity to purchase a home is very important, and we're going to look at that, and every lender will look at that. Number two is the capital, and that's basically your down payment. Do you have a down payment, or is the down payment from an acceptable source? So the acceptable sources would, of course, be your own checking, your savings, but it's also going to be things such as a 401k, stocks, mutual funds, gift funds are allowable. So the capital or your down payment, your source of down payment. So we also will be looking at any large deposits. If you have any large deposits that are not sourceable, we don't know, we can't identify, or you can't tell us where it came from, then we're in most cases not going to be able to use that. We need to, number one, know that those funds are legal and that they're not borrowed funds, because if they are in fact funds that have been borrowed, we need to account for that for your debt to income ratio. They're essentially another bill. So sources of down payment, where your money is coming from, is very important. So that's your capital. The next one is the collateral, and the collateral is basically the property that you're going to be buying, so the home. And is it in financeable condition? So there are things that will make a home not financeable. The majority of the homes that you're going to be looking at will in fact be financeable, but it could be there could be minor issues such as a crack in a window, and that's considered a health and safety, so it would need to be repaired. There could be a stove that is missing, and oftentimes the underwriters will want the stove to be replaced. Or I've had a situation where a toilet was missing, and so you have to have a toilet for sure, so make sure you have a toilet. That would need to be replaced prior to closing the escrow and making sure that the home is financeable. In addition to that, we want to make sure that the value is there. So if you're buying a home for $800,000, it's going to need to have an appraisal that will be for that particular home, and want to make sure that it is in fact going to appraise at the $800,000. If it doesn't, then we're going to have to find some solution to that, and there are other solutions, and that'll be another video that I'll touch on. But basically, the collateral is the property that you're going to be purchasing. Want to make sure that it's financeable, and again, the majority of homes that you're going to be looking at will in fact be financeable. In addition, and lastly, number 4 would be credit. So credit is a topic that comes up a lot. I get these questions every single day, and I would say the biggest misconception is that most home buyers often believe that it is a requirement to have pristine credit. I am here to tell you that is not the case. Now, I don't want to say that you can have a 500 credit score and easily buy a home. That's not at all what I want to convey here. What I am saying is that I have clients who come to me and say, hey Mike, my credit score is only 740. Well, in most cases, 740 is an excellent score. 800 score is not necessary. So it's really a huge misconception. And also on FHA loans, you can go down to as little as 580 and put 3.5% down. On conventional, we can go to 620, and again, you can purchase a home. Now, it does become a little bit tougher. There are steps that we can take to improve the credit in a relatively short period of time through a process known as a rapid rescore. And oftentimes, one of the easiest and one of the fastest ways of improving a credit score is simply by paying down debt. And that will oftentimes mean paying down as little as $1,000 or $2,000, $3,000. There can be times where it may take $10,000 or $15,000, but not always. So it's really important to talk to a lender that really knows how to review credit reports, look at them, take a deep dive in them, can give you some helpful tips. I literally have reviewed thousands of credit reports in my career, and so usually at a quick glance can give some very helpful tips. We also use a software program where it will tell us exactly what steps need to be taken to get your score to a particular improved score. So for instance, if your credit score is 670 and we want to get it to 700, we can run a report that will tell us if in fact you can get to 700, and if so, what steps will need to be taken to get you there. And again, generally that will mean paying down debt, not always. So those are the four things, and I'm just going to recap here. We've got the capacity or the ability to purchase the home. Do you have that? The capital, which is your down payment. Is it from an acceptable source? Do you have the money in an account where you can draw from it? Number three would be the collateral, and that's the property you're buying. Is the property financeable, and is it going to be one that you can ultimately get a loan on? And then fourth would be credit. Do you have an acceptable credit score? Will your credit score be high enough so that you can in fact qualify for the loan? And there are many different types of loans. That's going to be another video. There's FHA, there's VA, there's conventional, there's jumbo loans. So each of the different loan types do have different requirements or different guidelines. So that's something that we will help you determine if it's better for you to take a FHA loan, if it's better for a conventional. Perhaps it's better to have a first combined with a second mortgage. So there's many, many different programs available, and any lender who is experienced and has been doing this for a long time should in fact be able to help you. We're here to answer those questions. We're here to help set up a strategy for you and with you. So please reach out anytime, and I look forward to bringing you our next video.